This sure is exciting. 5-year fixed mortgage rates dropped below 4% from a mainstream, reputable lender for the first time since April 2022. While 5-year fixed-rate mortgages under 4% have been available from a few niche discount brokers, you never know what you're getting, for the first time in 30 months, we now have a 5-year fixed interest rate from under 4% and from a major lender. Now, before I tell you all the details, if you like this type of content, please make sure that you subscribe to the channel. Click on that bell to receive notifications as I publish more content like this on a regular basis. ATB Financial, or Alberta Treasury Branch, just lowered its 5-year fixed interest rate to 3.99% for insured purchases and renewals. And this is huge. But interestingly, it actually happened a couple days after a few lenders increased their rates following an unexpectedly good jobs report in the United States that has pushed not only the US 10-year Treasury bond, but also the Canada government 5-year bond up. Now, bond rates, which have a high correlation on fixed rate mortgage pricing, they move all the time. On the map here, or on the graph here, is 2 months worth of history. So it really remains to be seen if this most recent rate spike sticks. It's about 30 points. Could we see interest rates rise more broadly? And how long is this ATB Financial rate actually going to be here? We're not really sure. Now might be the time to grab a rate hold for any of you looking for buying in the next couple of months. Those rate holds are typically good for 4 months. Now, I don't think that we're going to see the bond rate high for very long, but in the short term, it's definitely had an impact with some lenders. Their fixed mortgage rates now above 4.5%. And this is all because of unexpectedly high jobs numbers released in the United States last week. However, analysts have noticed a very, very low response rate on the survey that led to this number, with only 62% of businesses in the sample actually filing their responses on time, which is actually the lowest filing rate of any September report in 22 years. So we're likely going to see a downward revision of these numbers over the coming weeks. Now, downward revisions or sometimes upward revisions, they do happen often with these reports. And a downward revision here would likely bring these numbers more in line with the U.S. Consumer Confidence Report, which has showed U.S. consumer confidence actually fell in September. And the main reason stated is jobs. So this mismatch is likely going to come closer to each other and to matching once the updated numbers come in. So for now, if you can snag a 3.99 5-year fixed interest rate, that might be better. So for now, if you can snag a 3.99% 5-year fixed interest rate, that might actually be better than a variable interest rate of around 5.5%. Heck, even with 2% of interest rate drops in the forecasts, we don't really know how long it's going to take for that to happen, but you can actually save money for sure starting on day one of a mortgage if you lock this rate in, or choosing the variable, you can hope to save enough later in that variable term to make up for the 1.5% spread in rates right now. I know this is complicated, so please comment or click through to my website if you want to connect or ask any questions. My team and I, we are here happy to help you navigate this complicated time, answer any questions that you might have. Thanks, and see you next time.